Okay, here we go. Today is Thursday, 2 p.m. Thank you for listening. You are watching, actually, on Facebook. You're listening to Market Overdrive, and we are here today with another new hot topic. It's Thursday, September 28th, 2017.
September 28th.
And we're going to talk about some fun stuff, some difficult stuff, and some stuff that comes up especially in the cities, in all your urban areas. But before we get into all that, let me introduce my co-host for the day, the one and only Javier Garcia of the Federal Savings Bank. How you been, man? It's been a long time.
I've been doing good. Doing really good. Gotta say, it's been one hell of a summer market and things like that, and kind of starting getting adjusted to a little bit more of condominiums and people looking to purchase condos. So thought it'd be a great idea to kind of bring in a guy who specializes in nothing but, condos in the city with, Mike Opyd with Remax Next, and Joseph Abbatacola, who's actually with our condo department at the Federal Savings Bank as well.
Joseph, Mike's been on the show, so we're going to start with you for a second. Mike's been on the show several times. I think 3 times, right, Mike? This is your second?
Yeah.
I thought this was his 3rd time.
I'm all over the place.
All right.
He's all over the place.
He's been on the show. This is his second time. So we're going to start with you. Joseph, I think a lot of people don't understand your job, so what we want to do is jump into your the show kind of goes around your line of work specifically and the stuff you have to deal with on the financing side. So tell us a little bit about yourself, your career, the whole 9 yards, and what you do on a daily basis in the condo department.
Sure. So I've been with the Federal Savings Bank for about 3 years now. I work in the condo department. We make sure that the condo projects are meeting guidelines, Fannie Mae, Freddie Mac. For conventional side, we do FHA approvals and VA approvals as well. That's about it. We do co-ops as well. We don't do a lot of co-ops here in Chicago. That's more of a New York thing. So we should probably focus on condos here.
So today. You say, for those that are watching, because we have obviously most of our viewership and people that watch the show are potential clients and people that are green. They're trying to learn. I mean, guys like Mike and myself and Javier and yourself, we know what we're talking about. When you say condo approval, what do you mean? Are you like the guy with the rubber stamp going, I don't like this condominium, denied, we're not going to finance it?
Yeah, he is.
Tell us what it really is, condo approval. Like, why would you deny a condo? Why would you approve a condo? What do those things entail?
Sure. So some of the main things I'm looking for on the conventional side, we get the condo docs, questionnaire, budget, and master insurance. The questionnaire will be filled out from the HOA or the property manager. And it just asks basic questions. How many owner-occupied units are there? How many rental units are there? We take a look at the budget. A big item on the budget is how much they're contributing to the reserves. We need to see 10% being contributed to the reserves of the income assessments.
Now, are you guys typically walking away when you don't see the 10? Because we just had our last show that I did. We discussed how the reserve might have been a little low and they weren't really keeping maintenance on the property. And our client that was here is just a member of the association. He wasn't, I shouldn't say he was part of the board, but he was just a homeowner. And 10%, you get somebody under 10%, a reserve that's like 8 or 7. Big rubber stamp, no, rejected, denied.
So there's a few ways to get around that. There's 2 types of reviews that we'll do. One's a full review, one's a limited review. During a limited review, we don't have to look at the budget. And to be able to do a limited review, if it's a primary residence and you're putting at least 10% down in an established building, we can do a limited review. So the 10% reserve contribution doesn't matter. Second home's 25% down. And then if it's an investment property, we always have to look at the budget. So there's really nothing we can do if they're not contributing 10% on an investment unit.
Why are you always looking if it's an investment property? No matter what the down payment is.
Yeah, every investment property, we have to do a full review for Fannie and Freddie guidelines.
Why do you think that is? You're a finance guy.
Yeah. I think with an investment property, anytime that you're looking at it, it's just a little bit of a higher risk. It's usually a lot of people are sometimes a little bit more willing to walk away from an asset like that. But I would probably say it would be the investor concentration you have in the building.
Pretty insane stuff. What I say is we're actually being rather rude. We're supposed to have a moment of silence right now for somebody that passed away.
The Hefner. Everybody, bow down.
Sad story,
actually
man.
Went to my high school, actually.
Hefner grew up right here in Chicago, so for us not to acknowledge
him,
him,
northwest side of Chicago.
And you're going to joke, but when you think about Hefner real quick, just to kind of change gears for a second, we're a radio show. Right. Guys like Hefner helped move freedom of speech like in nobody else's business, if you think about it. I mean, he was boycotted, and he had a lot of grief for putting out his publication back in the 50s, and he spent plenty of time in court doing the freedom of speech and the whole 9 yards. So He was more than just obviously the obvious, every man's man, if you will, who. Someone cracked the joke. You're like, does Hefner really go to heaven, or is he going to be kind of like upset when he gets there? Because I mean, look at the way he lived. It's like, oh wow,
heaven on earth.
Yeah, heaven on earth the whole time. So, but yeah, just thought to throw that in there because he's a local Chicagoan. We don't want to forget that. And I'm sure he had a condo around here too.
So, Joe, let me ask you a question. I get a lot of realtors who sometimes their biggest fear is whether or not the condo is unwarrantable. Like, what are some key facts in regards to condo projects that will make them unwarrantable?
Sure. So some of the main issues we see is single entity ownership. You cannot own more than 10% of the project. So if there's an investor that owns more than 10%, it would make it non-warrantable.
Okay.
Commercial space, there can't be more than 25% of the project dedicated to commercial space. If you're buying an investment property, the investment occupancy cannot be more than 50% as well. So there can't be more than 50% being rented.
Okay.
Those are the biggest ones. Delinquencies as well. 15% of the units cannot be more than 60 days delinquent on their HOA dues.
How many of that?
15%.
15%.
1-5.
Okay.
Mm-hmm.
It's not bad. Now, in regards to the mixed use, you said 25% of the actual building. So are you guys counting unit by unit in regards to commercial units versus residential units? Or are we looking at square footage as being a part of that as well, too?
Good question. Yeah, it's square footage of the entire project.
Square footage of
Common
the entire
areas,
project.
everything included.
Okay.
Mm-hmm.
There's a lot of movement going on right here. There's just way too much movement. With that being said, I think we need to get a little bit deeper into our other guest. Mike, you've been on the show a few times. I know the last time you were on, you had just recently, or you were about to, open up your office at Remax Next over in the West Loop.
Yep.
Hopefully that's going well for you.
It is. Yeah, we got a few agents on board. We got a couple more that we just have recruited who are going to be joining us in the next month and two. So, yeah, things are going well. I think we're doing things the right way. We're really focused just on agents. We got the big name of Remax behind us, so we don't have to worry about the advertising piece there. It kind of speaks for itself, and we could just focus on how do we really take care of agents the most we can as possible. I mean, that's our main focus. That's our goal, is how to give them, how do they make the most amount of money? How do they market themselves the best commission splits, whatever they need is what we're there for. So, yeah, I think we're doing things right. I think we're starting to make a name for ourselves, but it's a grassroots campaign. We're starting from scratch, and that's the cool part of it. We get to grow from nothing into something that's going to be amazing.
Now, speaking of growing, you're growing more than just at work.
Well, my wife is.
Your wife.
Yeah,
your wife
I'm not growing anything,
Your wife's going to considerably grow with what she's got going on.
Yeah.
Tell us the great news.
Yeah, so we are going to be having twins in January.
Louie!
I know, man. Just knocking it all out at once, man. Just done. Not doing this one after the other type thing. So I'm an overachiever, and I overachieved on this one. So high five to myself. And it's going to be a way different life in January, that's for sure.
Twin life.
Now, there's a rumor I got from somebody that's like kind of went through all your profile stuff that you tweet out at times husband pregnancy lessons.
I do.
Elaborate on that real quick.
Yeah, talk about the biggest learning curves ever.
Right.
So every time I learn something, I'm here to help people. So I want to help all those future fathers out there, or current fathers, or people that are just got let's say future fathers that there's a lot of things you got to learn along the way, and I'm here to help. So. The last one was we were traveling downstate or down to Louisiana, or Louisville for a wedding. We stopped about 8 or 9 o'clock at night. She's hungry. We're at Arby's. I went to grab one fry, and I swear she almost bit my hand off. Like, you do not touch a pregnant woman's food off her plate.
Never.
Ever.
Never do that.
Ever. So that's my 5th lesson. So every time I learn something, I'm posting it because we got to learn.
Is that a pregnant thing? Because my fiance don't want me to touch her fry, period, and she's not pregnant.
Are you sure she's not?
Yeah.
I want to ask that question.
Oh, jeez. That'd be interesting. But hey.
Baby Memeti.
So I told you before the show we went on, I had some advice to you. I have twin sisters. And my advice is if and hopefully you guys have another child after that, try and keep that balance, because those twins are going to soak up all the attention. Everywhere they go, they're going to talk about the Opyd twins. I mean, it's just like they're like the stars of the household. So you will become secondary, obviously, because I remember it all revolved around them.
Wouldn't I be third then?
Awesome.
It's pretty much all about the wife, and then it's the
You're
kids.
both going to be
right?
secondary.
Yeah,
Trust me.
we're
They walk in the
useless.
room and everyone's like,
Yeah.
I mean, the parents are like nothing. If there's a third or a fourth child, they're absolutely nothing.
all about the babies.
I'm okay with that as long as they're willing to take care of them while I'll have a beer in the background, and I'm cool with that.
Awesome stuff.
Take advantage of it.
Definitely.
Let's hit back a little bit to the topic of the day. Condo questionnaires is what we're discussing. The lines are obviously open if you have questions or if you've had problems with your condo or if you have concerns. Or maybe you're trying to buy a condo right now and you're not able to get financed because you're hearing there's issues with the association, which a lot of consumers don't quite understand. They think they take it to heart like it's their fault they're not getting approved. It's not your fault oftentimes. It's actually the building you're trying to buy's fault or the association that is actually running it. So if you have questions, feel free to pick up the phone lines. You could obviously call into us. The phone number here at Market Overdrive is area code 312-521. What is that? 8589. Again, that's 312-521-8589. And, of course, you can follow this show live on a regular basis every Thursday at 2 p.m. on Facebook, Market Overdrive, /Market Overdrive. Of course, go to our YouTube channel. We are on podcast with the WGN Network, WGN Radio. And last but not least, you can always go to our website as well. So with that being said, give me some more things that you've run across recently over the last couple months. I mean, I've personally in the financing world have bumped into specifically the 8% thing that just recently happened to me. And, there's ways around it with the reserves. But there's other things that I think people aren't aware of that are going to come up with, which happens with condos. It doesn't happen with single-family homes.
I would probably say one thing that I kind of learned, I've had a couple projects where they were like 4-unit projects or 5-unit projects where they thought that they were like the whole unwarrantable type of situation. But I actually went over to Joe a couple of times and he was telling me, he's like, well, technically, he's like, I know that the 1% ownership entity, he's like, but being that your transaction would be going on sale and be going under contract, he's like, technically, that would actually constitute that specific condo as warrantable, because that one transaction is going to remove it from that 10% investor concentration. So one thing that I've always learned is get that condo questionnaire, get that, ironed up, get your decks and bylaws, get your budget and everything, and just get it over to your condo department to do a review. I would say sometimes even do that prior to even going under contract, just to make sure exactly what you're going to deal with. Because sometimes you'll get a buyer who thinks they're going to do 10% down on a specific condo, and it turns out that they're going to have to do a 20% down project, because 20% down loan, because it's non-warrantable. So it just really depends.
Now, Mike,
oh my God, could this be any more boring?
God, my God.
Seriously, how does it even pertain? What's the difference? You guys are talking about sports, Hugh
I feel like
Hefner.
there's a loud squirrel in my ear now.
Like, how is this even
did she get in
relevant?
here?
Dude, she's small. She can fit between cracks and things like
She
that.
just got in.
I feel like it's
Karla
a funeral
Mina.
in here. Like,
Yeah,
all these guys and
you
you guys
know,
are talking about
I'm sick for one.
You're sick?
Put that out there. I feel
We're
terrible
talking about
today.
FHA financing today and a condo. What are we even talking about
I
aside
actually
from
found
Hugh
out from
Hefner
Joe
passing
today
away?
that people don't want to get their condos FHA approved because they think that it's a less quality
Joe
buyer that's
who?
going into. Joe Abbatacola.
Oh my God! I was like, hi, Sean.
The guy next to you.
There she is. There she is. You're always forgetting the guest name.
Oh, I was like, Joe.
Joe,
Damn it,
who?
just leave it on this
Oh,
paper.
just that guy sitting next to you.
She's
Yeah, can we start this show all over again? Hey, Mike.
Hey, Karla.
How are you?
Good, how are you?
Good Lord.
First of all, your family's expanding, not his wife. Jeez, where is his wife? I'm going to speak for the women in the room. We have somebody else also, another girl in the room, because you guys, I love how men talk
What's that
about
girl's
pregnancy.
name? What's that girl's name?
Don't worry about it.
What's that girl's
Exactly,
name?
exactly.
Raquel, how are you doing?
You messed up.
It's like 4 or 5
I
yards.
know Raquel, okay?
So
Why is this relevant, though? I think this is the key that you guys have to differentiate. Is that a word? Like separate
Differentiate?
the two. Yes, there's two things going on, right? We're talking about getting projects or buildings that are trying to get the association approved, right? Because there's two different things. You have a non-warrantable building, and then you have an FHA buyer. So how, like, I know you talked about the requirements to get a building to be FHA approved, because a lot of buyers, and we talk about this all the time, who are buying under 300 per se, are going to be using those loan products. And sometimes they get really bummed when there's not enough reserves, operating budget, there's not 10% in a non-operating budget, right, for reserves. And then there's a majority rentals in the building. And so you guys see it as high risk, and therefore the property doesn't qualify for financing, correct? FHA. But now you're talking about a whole other subject with it being non-warrantable.
Right.
So can we go from a non-warrantable to getting it to making sure that it becomes conforming so that people can go ahead and buy condos? Because Mike, you do a lot of sales in condo buildings. It's really terrible when we can only tap into like 15% of the inventory, correct?
Yeah, when the FHA condos are the few and far between. They're almost like that unicorn because
Yep.
I mean, really, I don't even know if it's 15%, but there's only a handful that I even know that are FHA approved. I mean, that's a tough thing. So you get someone who doesn't have a huge down payment, and that's typically where people are doing the FHA loans. It's this lower down payment, 3.5%. They
Credit
can't buy
scores too.
I've
Yeah,
noticed
credit
that there's
scores
a lot
too.
of
There's
like, these
also those things, too.
associations that just let the approval expire as well, too.
Yeah, a lot of them. I mean, there's a HUD website you can go to and check, but even that, I don't know how even as up to date as it should be.
So
it's
I'm
tough.
feeling a little bright and savvy today. I'm going to encourage somebody to come up
Why
with
is
a
that?
company because I'm always smart and savvy. Nick Memeti. Anyway, somebody can start a company and say getting all these buildings to be approved, right?
That's why
'Cause our
Joseph's
buyers
here.
need it.
That's why Joseph's here.
Joseph.
He's,
You and
he's
I
trying
should
to get
start
his
a
fame
business.
launch.
Let me go ahead and start like a business plan here. How to get buildings approved because our buyers are looking for inventory and we're looking for affordable housing. And FHA is supposed to be a product that allows us for affordability.
We'll back it up a little bit.
Go ahead, back it up.
You can still get a building FHA approved. It's just not like it used to be. Back in the day when we would have an FHA client, they'd want to go buy a condo, and if the building wasn't approved, we could do a spot approval.
Right.
I mean, we're going back.
Can you
is
do that
back
now?
like at least
Joseph, you look
100
pretty young,
years.
so I don't know if you were doing it in 2004 or something
No
like
spot
that. but-
approvals now.
Right,
I'm
no
like-
spot approvals anymore. You have to go through a full approval
Full
process.
review.
How long does it take for you to get a building approved, FHA?
Great question. So it really depends on how fast you can get all the documents back from the HOA. But once we have everything that we need to submit, usually takes about a week or two to get a response back from HUD.
And what's the things that HUD would frown on and just say, no, it's denied? Let's say you have the reserves, the budget looks normal, everything just looks normal, but there's something, is there anything in particular that makes it so hard for some of these high rises to not get FHA approved?
So one of the biggest documents that they're going to look at are the decks and bylaws. If there's any type of leasing restriction in the decks and bylaws, they'll deny the building.
Wait, what leasing restrictions? You want it to be to have leasing restrictions, right? Because you don't want majority rentals.
No, they actually
No, they want it
don't
to be able to
any
be
leasing
rented.
restrictions.
They
Yeah.
want
Oh,
you to be
right.
able
They
to
don't want it.
they want it to
Exactly.
be rented.
Okay.
Yeah, right of first refusal as well. They want you to be able to sell your unit free and clear, no approval from the board. Same with leasing. They don't want you to have to submit the lease to the board and have them approve it. They just want you to be able to lease your unit as right when you want to do it.
Now, based off a lot of the reviews that you're doing, what percentage would you say of warrantable condos meet some of these requirements to actually become FHA approved?
I mean, most of the warrantable projects would be FHA, VA eligible. The conventional side doesn't really care about the leasing as much, so that's going to be something FHA and VA care more about.
Okay.
So that's one of the biggest differences. VA doesn't care about the budget. They don't have an occupancy requirement. You just have to have 70% of the building sold already for VA, whereas FHA wants 50% owner occupied. They'll go up to where a single entity can own up to 50%, whereas conventional guidelines will only allow 10%.
Really?
So that's a way of getting around that 10% single entity ownership, where you can submit it to FHA and try to get it FHA approved.
Okay.
I have a question
that.
for the future daddy in the room, Mike.
Yes.
So, at what point do you start getting looking into the association when you're setting up appointments for for the properties that you're going to be showing your buyers? Or what do you advise buyers out there before they start their search?
Yeah, well, obviously start with a good agent, of course. But anytime I'm setting up appointments, I'm always looking through all the information. On the MLS, us agents have, that spot where we could look at the agent remarks and see if anyone is actually a good agents are always putting information on there. What are the reserves? What are the owner occupancy? Any special assessments coming up? Any lawsuits or litigation against the association? Like any of the big ticket items, all the good agents are typically putting that stuff in there. So that's the first place I look. Unfortunately, it's not a guideline. We have to do that, and most agents don't. So a lot of times it's, getting to know the buildings just from doing this for a long time, so I know which ones to avoid. But also, sometimes you just have to go see a property. And then if it is something they like, do the due diligence on the back end, where then I'll reach out to the agent or the association and say, guys, can you give me this information before we make an offer? Because I don't want to waste my client's time or my time doing this.
Right.
If we're going to get 2 weeks in, see the budget and see the assessments, or that there's, tons of special assessments.
Oh, that's that noise. That's that famous sound.
So annoying.
It's time for the Nitro question. Brought to you by, let's make the Nitro question brought to you by Federal Savings Bank today and Javier Garcia team.
There we go.
There you
That's
go.
fun.
There you go.
We got two Federal Savings Bank
The
teams
Nitro
here.
question is going to go to Mike Opyd today. I should totally be just hitting him about his biggest fears as a parent because it's coming up. You're not a
That
parent
would be
yet,
so
right?
cute.
Nope.
Okay.
January.
but we're gonna try and keep it back to business for a little bit. Tell us you don't have to answer right now. We'll give you about 15 minutes during the course of the show. You can kind of mull it over here. But instead of going all rainbows and unicorns, we don't want you to tell us about your ideal client. Tell us, in your opinion, what is the ultimate nightmare client? What do you not want someone to do to you? You don't have to give us names of who it was, and if you have a story, you could tell a story.
Okay.
You don't have to give out a name unless you really want to, because you're cool like that, and we would totally appreciate it. We
Social
totally
media
know
is
stories.
everywhere,
Be
man.
like,
But-
Tim,
but like
I
so.
really
Give us
hated
a
you.
scenario now. If somebody decides to comment in there, going, "That's not what happened," Mike, we'll know who it was.
Right.
But go ahead and just get that warmed up. Or
right.
your nightmare story or your nightmare client, either
Gotcha.
or. And we'll come back to the Nitro
Okay.
question, brought to you by the Federal Savings Bank and Javier Garcia in a little bit. Moving forward, though, you have, I mean, with association specifically, how many times have you had a client call you and say, "Hey, I'm really interested in buying a 2-bedroom condo in one of these 3 or 4 buildings," and I know you got to show them everything they want to see, or at least cater to it. But how many times have you literally
Denied them
made
to
heavy
see.
awareness of a bad association?
Every
And-
single time.
Every single time.
Every time. I'll tell them if there's certain buildings I know that are just not good to buy into, I'm just going to tell them.
Flat
it's
out.
a waste of time. Because, I mean, nobody buys real estate to lose money, right?
Right.
I mean,
Yeah.
You don't want to buy a depreciating asset, so why even waste your time looking in a building that is just going to constantly be either hit with specials or, the owner occupancy is so low that, financing is just difficult for people. I mean, you're totally limiting a buyer pool in a building.
Right.
Someone's going to buy in there and they're never going to see the appreciation the whole area is getting, and they're going to be like, well, why isn't my building going up? It's like, well, I told you,
Yeah.
it's hard to get a loan in here.
Back in 2009, there was some amazing deals at a property on LaSalle, and I'm not going to give the address, but I think people might figure it out quickly. And it's a beautiful looking building, modern, the whole 9 yards, and there was some like fire sales on condos.
Really?
Oh, so cheap. Or I think it was 9 or 2010. And I was itching to pull the trigger on 2 of these investments. And all I kept hearing about was how brutal association. So obviously I checked the temperature. I went back about 4 years later. Still nothing happening. Like the value didn't even really go up that much, considering there was a crash, prices depressed. It was just not, I'm really glad. And the only reason I didn't buy there is because every time I mentioned it to every other agent, you check your temperature with a bunch of people. You
Right.
ask this guy, "What do you think of this property? What do you think of this?" And they're all kind of like, and that's bad. If you think about it, being in a building where every main, or I should say affluent or experienced agent in the neighborhood wants to avoid it,
Yeah, that's that.
what's that do for you as a seller one day?
Right. I think the difference with that, though, is that during that time, a lot of buildings were being built before then were supposed to be condo buildings. The crash happened, and then, I think we all know kind of one of the developers that put up a lot of them. It might be, I think I know which building you're talking about.
Oh, yeah.
But they ended up becoming rental buildings because they just couldn't sell them out. So now you end up with this really low owner occupancy. But the rest of the building's great. still good reserves, no special. It's a newer building, so there's no issues. But you're looking at 30% owners because it just hasn't flipped over yet, and that's a lot of those buildings were up. I know which ones you're talking about. Where that's the whole point is that nobody could buy in, or nobody wanted to buy into them because the owner occupancy was terrible.
You can't get
you-
financing,
yeah, it's
or you
real
can,
difficult.
but it's brutal because
Brutal
you go to
financing, you're gonna
non-warrable,
get
and
an interest rate
instead of
that's-
getting 4%, you're at like 7 in some of those cases, or 8.
Yeah.
I don't know what your rates are, but I found them only as low as 7.5 in a lot of cases on the non-warrable.
Yeah, no,
stuff.
you're
8.
definitely paying a premium for the non-warrantable condos. That's for sure.
And it's a first-time buyer who's going to do that, who's going to take that hit just because you can't get the association approved. I think it's your fault.
Joseph,
You're
on blast.
I want to jump in here on a misconception. Actually.
Misconception.
Go ahead.
Can
So,
you say
teach
it?
us.
They're all wrong. All of them.
It's like
Not
all of
mine.
you are
Mine's
wrong.
always
I was
right.
misconceived,
Don't
so you can go ahead and tell us about
Come on,
misconceptions.
Joe. Give it
Go
to
ahead
us.
and say Nick Memeti was wrong.
No.
That would make my day.
It's looking my way.
No, don't do it.
So if the rental concentration is more than 50%, you can still buy in as a primary or a second home. There is no requirement there. It could be 99% rentals, and you're buying it as a primary. You can do it.
Really?
It's just when
What?
you're trying to buy it as an investment property.
But then you can still use the 3.5% down.
Wait, what?
You can still go FHA.
When was this? Did this change?
She's pushing the FHA, even though it's not FHA
forget
approved
FHA,
yet.
'cause we're actually, both of us, we've got 30-something years
Look at
experience
that.
between the two of
You
us.
stunned them.
I own the
Oh my
place.
God, I love this guy. He's
Wait, no,
every week.
Joseph, you're about to get shot. So hold on a second. When did this change? Because at one point it was 75%.
Whatever.
For a long time, it was
Say it.
75%.
I'm not sure when it changed.
Had to be owner.
A long
Wait, are we
time, like
misunderstanding?
January.
He's been doing this for 3 years.
Had to be owner
so-
occupied. 75% had to be owner occupied. at one point through Fannie and Freddie.
You better be right.
If you're buying it as an investment property.
No, even if you were buying as an owner-occupied, at one point you had to have 75%
I think at one
occupancy.
point, yeah.
Owners, 75% had to be owned, is what I meant to say. Are we miscommunicating here on what we're both talking about?
I think we're saying
If
the same
the building
thing,
was less than 75%
Sold. That's what you're saying.
owner-occupied, actually, because if you had too many rentals, building I lived in around the corner, they would not go below 75%. The 25% rental approval, that was it. If you got bumped off, you'd have to wait in line, and 75% of the property had to be owner-occupied because financing was a problem for people trying to buy in if it was below the 75 threshold for a while.
must be an old guideline.
So
Just
that's
like
what we're
you
trying to
did.
say. I
Old
mean,
guidelines
we
for
might still be
old
rolling on an old
I
guideline.
didn't even know that.
I didn't
Yes.
either.
So now the current guideline is 50% has to be owner occupied if you're buying it as an investment. But if you're buying it as primary, or
It could be
second
2%
home,
owner occupied.
correct.
What?
Dun,
Yeah.
dun, dun,
Mind
dun, dun,
I had no
dun.
idea.
Yeah.
All right, I
love
suck.
it.
I'm gonna leave now. Totally stripped my knowledge card away. I mean, yeah.
Seriously.
Well, I mean, he's in a department. That's what he specializes in. We're in a department where we kind of have
We
to know
just
a lot
sell
of
stuff.
everything. You got to know a lot of everything.
I just crunched the numbers in the monthly payment. That's what I
Just
did.
send me
He
the
just
docs.
calls you.
And then
Javier just calls
Joe, I
you.
got this deck pay. Can you take a look at this?
Exactly.
See, Mike, aren't you happy that you're in the right hands so that you don't get your deals killed all the time?
Yeah, and that's mind blowing. I've never heard of that. Are you sure you're not just making that up? Like seriously.
I know, but
How have we never heard
we're
this
gonna
before?
fact check that, like CNN.
Yeah.
Like seriously.
Like they
Let's look it
fact
up.
check the president.
back to the
Sanchez, look
office.
that up because I need these
Did Joe?
points.
Did Joe really say that?
Yesterday, the president said this. I wasn't good. Yesterday, he said this. Nope.
Fake news, man.
Fake news.
Oh,
So
man.
that's gonna have to get fact checked.
That's
So
crazy.
This is awesome.
I like that. I didn't know that.
what else you got?
What else?
What else you got,
I don't know,
Karla?
what else do you think?
Oh, I love it. You guys keep talking
You got to have
about
some other tidbits, Joe. I mean, because you just do us backwards here.
Well, why would you want to buy in a building that has 99% renters though? Like that makes no sense.
Well, he's
to
giving
me.
you the
Well, because
extreme
otherwise
example.
you would have to only buy cash, and besides, what if you got
Or
a really
somewhere
good
else.
deal because the
like
developer
they're somewhere
kept
else.
all the units and they just waiting for the market to weather and they kept it, and they're really good rentals. Some of these properties are renting very well.
Yeah, but you're owner occupied if you're right. You said 50% has to be owner occupied for it to be an investment.
purchase.
Right. So if you're owner occupying it, why would you ever buy into a building that has 99% renters? Like that's insane to me. Like
It's
that
high risk.
completely
It's a
high
condo.
risk.
Cheap.
Condo living.
It's always about value.
yeah.
It's always going to go with
Sometimes it's cheaper,
pricing, yeah.
Yeah.
You know,
I wouldn't.
Or it's an
Well, I
investment,
wouldn't.
right? Because you're going to
Mike
rent
is like,
it
I
out.
would
and
not live
Never.
anywhere with that many renters in the building.
but
But
Frat
that's
party.
your 15 minutes are up.
Cool.
So you got to come back and answer the nitro
No,
questions.
no,
People
that's
are waiting
fine.
to find out what your nightmare story is or what your nightmare client is. I'll take-
Realtors never have
I'll
any
take
nightmare
either.
No,
clients.
all
I don't
of them.
believe
They're
it.
all
You know what?
saints.
Save that
All of
crap
them
for
are
somebody
saints.
else. There's always a nightmare client.
be
They don't mean to be,
All
but
my
they are.
clients
Yes.
are awesome.
No,
Wait,
no.
Nick,
Not what
you
we
and I
hear.
have a nightmare client
We,
together.
exactly. So how could you possibly say
you go.
we have
Hey,
one going on
this kid's got
and we
this
have one in the
therapy
past? I've
because-
literally had
Oh
to
my
check
God.
myself into a
Oh
doctor
my God,
with
we
some of
do
Karla's
have one
clients.
together that
Yeah.
sucks. Not that my client sucks, but the file itself, like the predicament.
Everybody here
That's
has worked on that file.
Let it go,
Are we
Nick.
talking about Midlothian?
this is
Again,
Mike's,
this is
Mike's
not therapy
moment.
for you.
Mike,
My moment.
Mike,
Karla
give us your
steps
moment.
in,
I
ruins
know.
everything.
She always ruins on everybody's parade. Mike, give us
Karla.
that.
Yeah, I would. You know,
Nightmare
so
client.
as a real estate agent, one of the biggest misconceptions is that the buyer knows more than us, and
Always.
every
Duh.
turn, right? Because they read something. It's like, to me, it reminds me if I broke my leg and I went on, WebMD, and all of a sudden I found out I was dying. It's like, would I listen to that or would I go see a doctor? I'd probably go see a doctor. So any clients that will come to me and then argue with me every time I would do any type of market analysis or try to tell them like, hey guys, this is the real value of the building, and then they come back and they show me a Zestimate or something crazy, and they fight me every single step of the way for these comps. I had a client that was like that, felt he knew more than me, and we would constantly run to this where he'd want to make an offer on a building, and I worked with this guy for about a year. You know,
Okay.
this is a long time. Every single time, I would say we probably put close to maybe a dozen offers in that time. So he was technically a real buyer, but every time we'd go, I'd do the market analysis, send him the comps, tell him exactly what I think this property's worth. He would want to put an offer way below what I'm looking at. Not a low ball offer, because I would never submit a low ball offer, but just low enough where you're like, this is market value. It's priced well. Submit it, and I would tell them exactly what happened. They're gonna either reject it or counter us back at like $1,000 down or something, like, or $1,000 less because it's priced well. 12 times this happened.
Oh.
Every single time, 12 times. Finally, and his mindset was, well, it's okay. Eventually somebody's going to come down in price. And I'm like, not in this market. It's spring. There's no way. 12 times, and I would fight him every single time. And we'd have screaming matches on the phone, emails, texts. I'm surprised he didn't fire me at this point, or I should have fired him, I guess.
Yeah, sometimes you have to.
Sometimes you have to, but, trying to be the nice Samaritan, help him out. Finally, we got an offer accepted. I had to beg the listing agent to accept this offer. It's not only that, but it wasn't a high down payment, and he wanted closing costs. Wonderful, right? So then there was always the appraisal concerns and that. So finally got accepted, finally closed. I go there, I bring a nice gift for them, a nice card. I thank them, I hug them, they thank me, they thank our turn. I do.
That's so sweet.
I'm a sweetheart. And then they literally.
I don't even go to closing, so that you're awesome.
You're a lender, yeah. You never do.
Go ahead.
12 hours later, all of a sudden I get a notification that he wrote me a bad review on Zillow and trashed me. And I actually countered because I was just like,
well,
if
since
you
it's
go,
public knowledge because it's on Zillow.
it's on Zillow, and you could go
what's
check.
the name? You should trash him now.
You could
No,
check. I
it's
went
all
on.
right.
She's like, you can trash him now.
No,
Feeling
I
a
went
little
on.
evil today.
I went
Queen
on
High
and I
Road over
countered
here.
it.
She's like,
I went
trash
on
him
and
now.
countered, and I stated my case because if you look at, I have close to 100 reviews that are pretty much all 5-star reviews.
Right.
I'm a toot my own horn there. I'm a good agent.
Right.
For someone to
You
have
are,
a
Mark.
You have
bad
to be. You're
experience,
sitting right here with us,
yeah,
man.
exactly.
Right.
So that's my long-winded story of just the worst client ever.
That's terrible. I should go and Yelp you, Nick. You should go and Yelp
Yelp me.
Yelp me.
Yeah.
You yell at
That's a
me,
new verb.
but you don't yelp me. I should
It's a
go
new
Yelp
verb.
It's a
you.
new
Let's do a
verb.
Yelp.
Yelping.
Zillow,
Let's do a
you
Yelp
Nick.
Yelling
review here.
someone.
I want a Yelp review.
Sometimes you just got to fire a client, though, Mike.
DZ.
I know. I fired a few in my lifetime.
You have to
so
sometimes, and you just know when it's time. But yeah, that is a bad scenario. So, so the moral story is,
Don't
unless
get your
you're a
clients from
former agent, and I mean former agent or loan officer, and I mean within a year or so, you shouldn't be trying to teach the person you hired because they probably have more knowledge than you, correct?
Yeah.
Yep.
Even if you're a loan, I've been doing this for 22 years. If I take 1 year off, you're going to know more than me as of this moment because you're current.
Yeah.
And these things change dynamically all day long.
Well, not only that, I find it interesting when people go like to these like home buying seminars and come up with like all these different jargon and it's
God.
like, oh.
And that's really the whole point of this show. That we're not going to try and sell you a CD and then you got to pay $49.99 a month to get educated again. Just kind of keep looping you to the next carrot and to the next carrot and to the next. You're just getting free information from us. But yeah, you hear these people saying, "Well, I took this course and I could go online and get this listings of all these foreclosures and buy them with no money down and then flip them with, and you're just like, oh my God."
Like, how much did you pay for that seminar?
And
Right?
It's insane.
It's
insane.
like the
but
best scam ever.
it is the best
It
scam.
is.
And so I've been working on developing my own CD with Javier.
$49.99.
$49.99.
We'll be at the Rosemont Convention
We're
Center.
even going to throw a 5'0" Latina in there and make it
5'4".
you're 4'8"
5'4".
5'4"?
with heels on.
Let's focus on it.
We're focused.
Yes.
Go
okay.
ahead. Go ahead.
She's like, I got nothing. Go ahead.
I got nothing.
No, but going back to reviews and people that know everything about real estate, like when our consumers tell us how to do our job, right? When people are shopping for lenders, they're specifically, I heard them say, it's like, oh, well, I want them to give me the best rates. And it's like, you know what? Rates are rates. It's about closing costs and processing fees, origination fees, and of course the service and the knowledge that they're going to provide within the transaction. So I really always take away that power from them because they read somewhere. Remember that one case with that client that kept calling you, telling you, I want to do a 15-year, I want to do a 30-year, I want to do this and I want to do that. And no, you don't know what you're doing. And I was like, oh my God.
Your rate's higher. Yeah, but I have no fees. Oh, okay. But I can make my rate lower than what they offered over there, but my fees are going to actually start to show up.
Exactly.
No, wait, I don't want that. Well, okay, so pick which one you want.
And
we
then
go
you're not
back and
even
forth.
under contract, so it's not like you've locked anything
Right.
until your property is under contract. And then after appraisal, it's when you guys lock the rates?
Or a lot of the times they go to these online lenders or whatever, like these AIM loans and stuff like that, where it's like a bait and switch offer, and it's like there's no way they're going to deliver that quote.
Yeah, some ridiculous interest rate that they didn't read has a bunch of fees, and then this whole thing turns into a big story, and then the agents are held hostage. The seller's side is held hostage, waiting for this guy to get his life straight after his big surprise. So,
Can I ask you a question, actually?
yeah.
What is the best gift a lender's ever given you to get a loan approved?
Charge him for that answer. I'm going to represent
Seriously,
you today,
man.
Joe, because you're just dropping knowledge.
Well, this is great. I can't wait to hear this answer.
$500.
Joe,
Like,
don't
what-
get fired, okay?
Yeah. What did Javier give you?
I didn't do anything.
Nothing.
Nothing. Just
Can't
it's a
accept
high
it.
five.
Yep.
What are you talking about? He's got his
love
foot
it.
underneath the table right now,
He
rubbing
gets a
his
couple
head.
liquid
Oh, yeah.
lunches, you know. He
Pleading
gets
the
some liquid
fifth over
lunches
here.
a couple times a month.
It's got to be. Well, no, Joe, sitting in your job, it's got to be tough because you probably have constant flack from loan officers that might, disagree with the way you're looking at something or want you to, loan officers are just aggressive people. I mean, that's
We're
what they
getting
do.
You know
very
what?
acquainted. He's
I
gonna
actually
be my
feel
new
bad
best
for
friend.
Joe because sometimes the associations have the hardest time getting you your master's insurance policy or all that stuff.
They're terrible.
It comes down to the wire, and then everyone's barking at Joe and like, Joe, we really need this warranty. You're like, now this loan is closing tomorrow, and it's like, well, I haven't gotten my master's
Think about
insurance
this.
policy
Yeah,
yet.
yeah. How many times have you waited like a week or two for something so simple as a
Yeah.
condo questionnaire?
I personally think
Now-
if you're ever
now
going
he's
to buy
gotta
a
go
condo, you
approve
got to have that
FHA?
stuff up front. Because sometimes just getting a hold of the associations and getting someone to work with you, especially some of these self-managed associations, it's like, oh yeah, it's Bertha, and she only picks up the phone on Wednesdays from 10 to 1. And it's like, oh, I got to wait until next Wednesday to call Bertha and see if she could provide me the condo questionnaire.
See, and that's some good advice too. When you're thinking about listing your property, you should definitely make sure that you have condo docs, right? Condo
Yeah.
regulation, condo docs and regulate. I can't even speak today. Bylaws and
You never-
regulations.
Decks and bylaws,
budgets,
Yep,
Questionnaire.
budget.
meeting minutes, the
Expenses.
last 12 months, right? To have that readily available, and also have a contact person. So when I put in a listing, I always make sure that I have all that information ready, so that when the buyer comes in, it's already there. Let me ask you a quick question. How often does he yell at you to get his files to go through?
Not too often.
Not too often.
That's his mistake. He should be yelling at you more often.
do a
so
lot of
these
single
files
family.
can pass through.
Don't stay away from the condos. Don't be afraid.
Don't be afraid.
Send me more.
Anything on the horizon about the something like an FHA spot approval coming back?
They've mentioned it in the past, but there's nothing yet.
Because I thought I saw something swirling that they were considering doing the spot approval just on that unit in particular. Is what a spot approval means. You don't have to get the whole building
They
approved.
stopped that though. It was in like
We
05,
stopped that a
06?
while ago, but there
Why
was
did
some
they
kind of.
stop it,
I don't
though?
know. I didn't do a whole lot of FHA loans back in 05 because they weren't popular, but nothing as far as
They mentioned it last year, but nothing. It's not gaining steam.
Now a veteran doesn't have any issues going into a condo. Does the association have to be approved for a veteran?
Yeah, you have to have BVA approved.
Yeah. It's
Similar
part of the-
requirements to the FHA.
Yeah, it's very similar. FHA approvals expire every 2 years. A VA approval never expires. So once you get the project approved,
like that.
it's good.
Mm-hmm.
They don't care about the budget. No reserve contribution is needed. They just want to see that it's financially healthy. So they'll look at the balance sheet and they'll look at the budget too, but they're not specifically looking for a reserve contribution.
Mike, how do you rate other than the obvious, the place is constantly clean, constantly maintained, but what are the things you look at to say that's a top flight management company or that's a top flight association doing their job the way they should be doing here in the metropolitan area?
One, response rate. Like Javier was saying, like if you have a big building, there's no reason they can't get back to you, right? If it's a condo building that's a high rise, hundreds of units, the management company should be able to get back to you right away, and they should have all the answers you need. You call them up, they should have it done for you really quickly. There shouldn't be any kind of mystery behind it. Also, when we do see the docs, just the organization of them. If you look at a budget and you're just like, it looks like, Elmer Fudd wrote this thing up. There's no chance that this is going to go anywhere, So it's like just seeing how organized they are, how in tune they are with their building. Self-managed buildings always tough because there's 3 or 4 units in one. I live in one personally. We meet twice a year.
Right.
So it's always a little bit more difficult to that. But just to see how organized they are, is there someone who's taking control and make sure there is a budget in place? Keeping track of what the assessments are like. If they are meetings, how detailed are those meetings? Are they just sitting there drinking a bunch of wine, getting hammered? Because if they are, it's not really helping that building. Why would I want my client buying into that unless he's an alcoholic? But otherwise, just trying to see that they are organized, they're on top of it, they know what their expenses are coming up, they know where they're at with their financials, and then they're just taking care of the building and budgeting for anything that needs to be done in the future. If there is a special that has to happen because of windows, which is happens to a lot of buildings, especially over here by the lake that were built in the 50s and 60s or about due, are they planning for that, or are they just going to wing it? And ask everyone to throw in $5,000 at one point. So it's organization. As long as they're really organized, then I have no problem, with those type of buildings.
And that should be the same advice for somebody who's in this walkout building that it's self-managed. If you're self-managing your building, you should definitely, maybe email us and we'll give you the list of what you need in order to get this property approved, right? Or what you need to have ready, like your minutes meeting minutes and all that stuff. Because a lot of people who are self-managed don't understand that. These are owners who are part of this, who live in this building and are part of this association. And I think that's the hardest part, because when they want to put the property on the market, they don't know what is the next step. What should I have ready? And what does it mean? Because that's going to control value as well. Right, because you're not going to be able to sell a property if you're going to be only targeting, people who are going to be spending a lot of money on interest because your building is not warrantable.
Right. Not only that, but it's just going to give you, if there's such a lack of inventory that is FHA approved, it's definitely going to make you stand out. I remember my brother was looking to buy a condo. He was looking to buy in Edgewater or Lakeview or Rogers Park in that area, and we were able to review the condo docs and everything, and they approved the association in like 25 days.
That's awesome.
So, as long as you have someone who's willing to work with you, I think we did a 60-day closing on that one just to make sure to give the condo department enough time to be able to get that approved. But it works.
Halloween's around the corner. I need another horror story. What's the worst special assessment you ever seen? And then
I got one.
Get yours ready
actually.
too, Mike.
One.
Everyone has to get theirs ready. What's the worst special assessment you've ever seen? We'll start with the man that has probably seen more special assessments than anybody else in the room.
I've seen him over $100,000.
God, I would be pissed off at the world if I had 100,000. How do you handle that?
Well, that's not per unit, but still.
It's a total, right? But
No, I'm
total,
talking
but
about per unit. Yeah.
Oh, per unit, no.
Because I got that one beat already.
Really?
I haven't seen that bad.
Per individual owner?
Well, we'll get to it in a second. But go ahead. So
Oh
the
my
worst special
goodness.
assessment per unit
What
that
do
you've
you
ever
do
seen?
at that point?
Probably around 10,000 I've seen.
It's pretty brutal.
Yeah.
Yeah,
Mike?
that's terrible.
35.
Carla?
16.
25. It was in New York. Some lady ended up falling, had a litigation against the whole frickin' thing, and she had sued the hell out of them.
92,000.
What? For one person?
For one?
You're crazy. Where?
What
When?
was it
It
for?
was a self-managed building, 4 units. Here's the best part about it. I was one of the owners.
You were suing the association. You were the cause of it.
God.
The building was sinking. It was a brand new building built on junk, and the whole thing was sinking. So
Your
now
commercial space?
we had to, I own the condo upstairs. And we had to get together, engineers, the whole 9 yards, and shore it up.
Sue
and
the developer?
Yeah, of course. We ended up winning. But you just kind of look at your neighbors and go, I hope you have this money, because it's a lot of money for any one individual to knuckle up.
That's crazy.
Yeah, that's
92,000.
ridiculous.
Where goes the
It started
value?
with the
Like, you're done.
75,000 special. We put it all together. It was 300,000 was the estimate between the engineer and the work that had to get done to make the building safe
Tear it
temporarily.
down.
And the building's worth more than that, but and then it kind of added on later, like another 10, 15,000 after that. It was a big nightmare.
That's painful.
92,000.
And see, don't scare people, because remember when George was in the studio, we were talking about, like, don't be afraid of buying in a condo, because now you have to deal with this. At least you have some spread. You can spread the joy. You can spread that budget. And
Look, you don't want to mow your lawn. You don't want to, work on your roof or worry about the maintenance. You want to move into a condo.
Yeah.
But at the same token, something can go wrong.
like moving
There's
in
a lot
next
of
to
people
you.
chipping in. That could be a problem for you. And I will stay up
Terrible.
late. And
That
it will
won't be in the
noisy.
condo docs, though.
Right?
Nick does not live next door.
No, it'll be in the agent remarks. Warning: Nick Memeti lives in his building.
Wait, who's that
No
bankruptcy
showings.
guy that has all those commercials? Nobody
Oh,
wants to live
Lerner?
in. No one wants to live in his, because he always sues the association.
Let's not
Peter Francis
let's not-
Jr.?
Yeah, it's that guy.
Oh, man, don't give him free press.
Oh, sorry.
I don't know why she brought him up.
But I'm just saying, a lot of people don't want
Must
to
be a
live
new
with
sponsor,
him. You have to.
right?
Thank you.
The
Mike.
Nitro question brought to you by Peter Francis Jr.
Stop it! I swear.
Go ahead.
Great show, Nick. Great show.
Well, you-
No, but you know what? It's awesome for people to tune in and understand the logistics with, condo, because a lot of people would love to live in condos. I mean, you have a lot of baby boomers who are selling their homes, are moving into the city to have their in towns, and they don't want to do, like you said, cut the grass and clean that snow in the winter.
They're becoming more
Yeah.
popular in the suburbs too. 'Cause
Full
condo buildings are
amenities.
starting to go up in the suburbs more than they've ever gone up.
Let me ask you
You're right.
lenders, and you, Joe, you could chime in. Like, what would be the benefits of someone to buy FHA? Why would they have to go FHA? I mean, VA, obviously, they're a veteran. Of course, it makes sense. But why would someone need to go FHA over conventional outside of maybe the down payment they don't have?
I'll let him answer that first, and I'll answer second.
Yeah. I would say FHA for me is a product where it doesn't differentiate too much on FICO score. Okay. So for me, for instance, if you have a client who maybe has a 640, 650 FICO, more than likely he's going to pay a premium on a conventional interest rate because he's not in that A+ rating for conventional financing. So for me, there's going to be a lot of flexibility, debt to income ratios as well too. One of the things that's the biggest deal killer for me right now when I'm pre-approving clients is people who have a lot of student loan debt. So we're having to use either the 1% or a fully amortized term. FHA allows me to get like an extra 10% in debt to income expense to be able to keep them qualified. But potentially, like just, layman's terms, someone with like a 640 credit score on an FHA, they're going to pay 85 annual mortgage insurance premium for the year with only 3.5% down payment. Someone with a 640 FICO score, even with a Home Possible or Home Ready, they're probably going to be paying anywhere between 95 basis points to 109 basis points. So overall cost, you're going to get a better lending product by getting the FHA if they're not that A premium buyer where they have that 720 FICO score, 5 to 10% down. It's just going to give them better financing terms.
I somewhat disagree and agree. I agree with the part where he said sometimes it's our only alternative. Like if we can't get the loan to be approved traditionally at Fannie and Freddie because credit scores is usually the biggest one, 3 or 5% down, typically you're going to have a much higher credit score, so you're going to go conventional. I mean, you're going to try and go conventional because I always do. I use the FHA button as kind of like the button. Like we got to go this way. And because it does give you flexibility with debt to income ratios and some other stuff. I don't like using the program if it's like, let's say you have a 720 borrower and some people just like doing FHA loans more than conventional loans. They feel more comfortable in their skin doing them for some reason. I don't know. Because you have these gurus and they really know their FHA stuff and their VA stuff. And then they look at conventional like it's so difficult, which the problem is that with FHA, you never lose your mortgage insurance. Mm-hmm. That's why I hate the program. I mean, I love the program because it gives people the opportunity.
You do lose your mortgage insurance if you put 10% down.
Right. Well, most people doing FHA are typically going 3% down. But traditionally, when you hear the word FHA,
if you're doing the minimum down,
it's a minimum down situation. Right.
But if you're looking at a 5% conventional on mortgage insurance, you're still going to have mortgage insurance for roughly about, I would say, 12 to 14 years.
No, you could actually call it in. If the thing appraised, you could spend $300, get it reappraised, and get it wiped out. Or you can, in some cases, some lenders will just take it off if it's been a couple of years and you've been on time. There's a lot of things that can happen with conventional mortgage insurance, and you got the rate that you wanted, and you don't have to worry about you're forced to refinance. A lot of times, FHA loans, you're stuck in the mortgage insurance, but they're both great products. Just who's the client? Right. So there's a thin line, and some of the underwriting guidelines change between the two. Like, VORs might be required in one and they're not required in the other. Or income not being a full 2 years, you can get one to go one way and you can't the other. So it depends on what the client scenario is. But it's not like there's in my opinion, there's no go-to. It's not like I would prefer to go to conventional on every loan.
Yeah, well, if you can go conventional, it's probably the route that you want to go with. You go limited doc, with AUS, just W-2s and a pay stub. In most cases, you're able to do that. But unfortunately, there's a big portion of the consumer base that doesn't qualify for that.
Yep.
Times are changing. I mean, the marketplace is really difficult to transact, and that's why you have to align yourself with people who understand what's going on. We're talking about getting your condo reviewed and also approved so that you can qualify for, the highest yield when you're selling, and of course, as a buyer, so that you can get the best loan products out there. But we're just talking about one step of the transaction. What happens after you're locked down, you negotiate all these terms, you iron out everything, and then you get to the appraisal. We're seeing that some of the properties are not appraising out. And I actually did get a call earlier this week. Someone asked me, is it customary now to request that during the attorney review that you state that whether the property appraises or not, the purchase price is still going to hold truth? I had a friend from New York who's buying, also had an issue with that being added into the attorney review. What are you seeing out there, Mike, and what do you advise?
I had that just happen. Yeah, it was very much part of the negotiations actually before. And what I usually see a lot of times actually with the closing cost credits, like a lot of people don't have the money to put for a closing cost. They might have enough for the down payment. They could put that 10%. But when it comes to that extra, 5 or 6 to, we'll say 10 grand or something like that, they just don't actually have that amount in the bank. So they want to get a closing cost credit, but when it comes to negotiating, we're negotiating off the purchase price,
right? And
then you're tacking on that credit. So what I'm seeing a lot of times is, especially first-time home buyers, which I work with a lot of them, is they want that credit because they need it. But the problem is that property going to appraise out? And that's usually the question I get from listing agents. Like, well, what happens if it doesn't? Like, will your guys make up the difference? Or how are we going to run into this? So a lot of them are getting hesitant when they know it's priced well, and we don't know what that appraisal is going to come in at, right? It's kind of a crapshoot sometimes, So we're running into that a lot, actually.
Right. I love when people say, is it customary, right? In this marketplace, nothing is
Nothing's
customary. We
customary.
haven't seen anything. I mean, I learned earlier on this year, I was a listing agent, and I seriously had 5 offers on a product. 5 offers. 5 different agents confirmed the value of my property, and the appraiser came in and said, no, that's not what the property is worth. And I'm talking about from like 160 to 145. At the 160, we were giving back, $5,000 in closing cost credits. So of course, the developer or the person who was flipping the product, took a loss. So it gets really difficult, and that's why I want to advise everybody to go ahead and during the attorney review that you demand that the verbiage be inserted into the transaction or an addendum that says, seller is to pay the closing costs if the value is, that you want to pay fair market value for the property and don't want to go below that. So make sure that you always get your closing costs regardless. I mean, we have a property in Berwyn right now where the appraisal came in at $320 and we were getting $10,000. So now the seller is going to net $310, and they don't want to do that because originally we promised to pay $349. But we're willing to pay $349 because we saw the value in the property. And of course, these multiple bidding wars just keep escalating prices. So, always make sure that you add that. My girlfriend in New York is buying a $1.2 million home, and the seller was saying, no, you have to come up with like 95% of the loan to value if in fact it doesn't appraise out. And I'm like, no, change that.
That's insane.
It's insane. So
You're basically asking someone to pay over market price for the property regardless.
Yeah, fair market value. Why is someone going to pay for less than that? Are you seeing a lot of that, Nick?
What I'm seeing is we're running
Low
out of time.
appraisals?
We are. Oh yeah. But with the bidding
Aren't you
wars,
glad I came in to just like kind of make this a
The
happy
bidding-
space
the
because
bidding-
you guys were like,
the bidding wars
Sorry.
is always going to be a problem for appraisals.
Yeah, it is.
I think lenders
it's
are always
happening quite a bit. So
a headache for the transaction, don't you think, Mike?
we don't.
We don't
We're not
do
appraisers.
anything. We
Just
don't
my new
appraise
friend,
the
though.
property.
You understand?
This is
We
the
don't
men.
do
So you guys
anything.
are not the
the
men.
worst
I like
thing
it.
This is the men.
for lenders when they get a short appraisal and now we have to call everybody. We're like,
Yeah.
oh, God.
I miss those days when you guys just bribe them. Just
What?
approve this.
Oh,
No,
Mike,
I'm
what do you
joking.
say?
Mike,
Cover your mics.
so Mike,
It's the pregnancy.
it's pregnancy brain. It's pregnancy. We've never bribed
Joking.
anyone.
Joking. Joking. Come on, you said lighten the mood, right? I mean, come on.
I'm exiting.
And that's the wrap of the show.
Bye, everyone. NMLS 217343.
You're not even getting my MLS
Mike
PTO.
Opyd, Remax next. He said it, not me. No,
Own up to it.
But all kidding aside, we are coming to an end. So what we're going to pretty much ask you is give us a takeaway from today and those people that are obviously listening in for the simple fact that they want to get educated on what's the main takeaway for them going into buying a condo, something that you can leave with them.
Just make sure your agent's doing their due diligence on it before you ever submit that offer. Make sure they're looking up to make sure it is a good building to buy into, and you will absolutely get the appreciation there if you do. If you wait and find out later on it's a bad building, deal could fall apart and you could waste a lot of time in that market.
Great advice.
Joe?
Good advice.
Don't be afraid to buy in a condo. FHA, VA approvals are really not that bad. Just send Javier the condo docs. He'll get them over to me. We'll submit it free of charge.
Free
Wow,
of
look at
charge.
that.
Free of charge.
He said free of charge. I did not say free of charge.
There you have it. Special thanks to Mike Opyd of Remax Next, of the West Loop here in Chicago, and Joseph Abbatacola. Did I say it right?
Yeah.
All
There
right,
you
of the
go.
Federal Savings Bank. He's the man in charge of associations. So if you can't get your loan approved at the Federal Savings Bank, call Joseph directly and scream at him. I'm just kidding. I'm just kidding. You're listening to Market Overdrive. You can follow this show on our Facebook page / Market Overdrive. And of course, we're on Twitter, Instagram, and our YouTube channel. This will be nicely fresh. Cut it and look all fancy.
Subscribe to the YouTube
Subscribe to
channel.
the YouTube channel or go to podcast. Subscribe there. So we will see you back here again Thursday at 2 p.m. next week. Thanks.